GE Aerospace just reported a dominant Q1 2026 earnings beat, yet the stock is down because of one key decision by CEO Larry Culp. Adjusted EPS was 1.86, destroying estimates, and revenue was $12.4 billion, smashing expectations, both up 25% year-over-year. Total orders surged 87% to $23 billion. That orders number is the most important data point in the entire report, because every order is future revenue already contracted. The remaining performance obligation, the backlog, expanded 11% to $211.3 billion. GE has more revenue under long-term contract than most entire companies generate in their lifetime. The commercial engines and services segment, which is the core of the business, delivered revenue of $8.9 billion, up 34%, with 640 commercial engine shipments including 520 LEAP engines. The LEAP engine powers the Boeing 737 MAX and Airbus A320neo, the two best-selling aircraft programs in aviation history. Every LEAP installed creates decades of high-margin repair and overhaul services, compounding for years. Major new wins came from American Airlines, United Airlines, Delta, and Ryanair, confirming GE continues to capture the global fleet renewal cycle. CES margins did compress 230 basis points from the mix of install engines versus spare parts, but that compression is a deliberate investment in future high-margin aftermarket revenue. The defense and propulsion segment delivered strong results, with revenue up 19% and orders soaring 67%, driven by broad-based strength. Free cash flow was a robust $1.66 billion, up 14% year-over-year. GE also announced a new $20 billion share repurchase authorization and repurchased $2.2 billion of shares in Q1 alone. Now for why the stock fell despite all of this. CEO Larry Culp reaffirmed full-year guidance, noting the company is trending toward the high end of its ranges for profit, EPS, and free cash flow. But after a quarter with massive beats, the market expected a formal guidance raise, not just a verbal nudge. Culp cited geopolitical risks for the conservative stance, being the disciplined steward long-term investors want, even as the short-term market sells off. Wall Street has a strong buy consensus and a $361 average price target implying 19% upside. Subscribe. GE Aerospace is executing at a level that makes every quarterly report worth watching. If you found this helpful, hit like, subscribe to Stock Scoop Shorts, and stay tuned for more quick market recaps.